Good morning, Canberra, for Cam's Mortgage Minute on Friday, October 5th. Today I'm going to talk to you about something maybe a little controversial, and I look forward to the feedback some of you have, and send me an email or whatever on the topic, and that's about rates. Rates are certainly everywhere. We see them all the time. Banks are touting rates all the time. Mortgage brokers, everybody's talking rates. But I'm not talking about the rate itself. What I'm talking about is how we determine who gets what rate. That's the thing I find really interesting these days. So let me kind of explain that to you. Let's say, for example, you're 25 years old, you got a couple of years of credit experience, you got a decent job, and then you've got somebody who, let's say, is 45 years old. Again, they've got a good job, they've got lots of credit experience, let's say they got 20 years of credit experience. Well, you can come to me and the rate that you're going to get is basically the same. That's right, lenders aren't differentiating, they're giving everybody the same basic deal. Unless, of course, you have really horrible credit or something else, that's the only time you're going to pay more. But otherwise, you two are going to get treated equally. Now, some of you might say, well, that's very fair, and others of you say, well, hey, what was the benefit of me doing everything right for all those years? I mean, come on, what did I get out of it? You know, both valid points, but the one thing that rates and basically individualization of rates that did in the past, let's say 10, 20, 30 years ago, is it basically slowed people down. That's right. What the government has done to try to kind of slow the real estate market down, banks were effectively doing it by the use of rate pricing policies. So what would happen is if you were, let's say, younger and you wanted to buy a place and your rate was higher, that forced your payments to be higher, which of course made your ratios tighter, which meant that you didn't buy as inexpensive as a place. You looked at it and said, well, do I really need this place? No, you know what, I can live with this place. And what it allowed you to do is basically have that mortgage for a while, get some more credit experience, cut your teeth on lending a little bit better, so that the next time out you went and looked at a different place, you'd get better pricing. As the time went on and on, the more credit experience you have, the better the rate got. But again, in today's politically correct world, it seems like we've gotten away from that. And I first noticed this starting to happen way back in the car business when at one time they started advertising, 2.9, 1.9, and 0%, and virtually everybody got it. Now it's in the mortgage world. Everybody gets that same deal. Is it fair? Is it not fair? Well, you tell me. I mean, quite honestly, it's very few professionals. Let's say, for example, you're a teacher and you're in your first year of teaching. Well, you certainly, if by your 20th year, wouldn't want to get paid the same as a first-year person. You'd say, well, look, I paid my dues. I should be treated accordingly. Why wouldn't I be? But it seems in lending, you aren't. I mean, everybody's treated the same. So, again, some of you may disagree with me on this, but I think it's important to have it an individual pricing policy because it really does give consumers a chance to pause and think about stuff. You know, imagine if the same thing was applied in credit cards, and if you had very limited experience, you paid an astronomical rate. And the person, well, I mean, they're already astronomical as it is. But let's say, for example, that rate was 40%. And with great experience, you paid, let's say, 15%. Well, the person paying 40 is certainly going to slow down their spending, and they're going to curb all those things because they're going, oh, I'm not paying that much. And it really forces you to think about things that you need and want. And you know what? There's nothing wrong with that. We live in a society today where everybody just wants. I mean, is there a need for it? I don't know. You got to answer that for yourself. But I think there has to be some back to common sense in lending. And that's not just across in the mortgage world. I think that's across the board. And if we really want to slow consumption and consumerism down, that's the way to do it effectively. And it also at the same time rewards people that are doing things right. Then there's nothing wrong with that. I mean, let's say we all work on the premise that, we teach our kids that, for those of us who have kids, work hard, pay your dues, and you're going to get, rewarded accordingly. But it seems in lending these days, there doesn't need to be a lot of that. And you know what? That doesn't make a lot of sense. So again, some of you will disagree with me, and that's fine. That's what we're here to do. But I do want you to think about it. I think it's an important topic and something that we might start seeing more of it come back in vogue as time goes on, as lenders realize that, you know what, there's maybe they've gone too lax the other way and they've got to start individualizing it a bit more. Time will only tell, or we may just stay the way we are with just a one-size-fits-all kind of lending policy. Who knows? Anyways, I don't know where you are, but in Victoria the weather's beautiful, it's warm and sunny, and I believe the weekend's supposed to be the same. Hopefully it is for where you are. And Monday's a holiday, so early happy Thanksgiving to all of you, and I will see you on Tuesday. It's been Cam for Cam's Mortgage Minute. Enjoy your long weekend.